Testing, testing, 1, 2, audio, audio, testing, testing, 1, 2. Hello, YouTube. This is Jerry D in Tennessee. So let's talk about AT&T. There's an article. This was last year, almost a year ago. It's not quite. It was July. This is June, so 11 months ago. So Dish and AT&T's new wireless partnership may foreshadow DirecTV deal. So, to look at some history, let's go to this other article. AT&T has officially spun off DirecTV, which is now its own business. This was August 3rd, 2021. So, the important part of this is AT&T did an acquisition of DirecTV in 2015, which at the time AT&T paid $48.5 billion. So they say $67 billion accounting for debt to acquire the business. To say that the business decision has failed to deliver is putting it mildly, as DirecTV bled. Now, given there's been a lot of streaming and stuff, but people still subscribe. I know people that are subscribed to DirecTV. I think DirecTV is going to be around for a while. But here's the reason I want to talk about this. So DirecTV is still there. AT&T is still. That's one of the services AT&T is offering is DirecTV, satellite TV. They also, through the same satellite TV, they offer a package deal with the cellular phone service through the same thing, which you can have a home cell phone as well too, kind of like what Straight Talk does, which that's what I'm subscribed to. Straight Talk home phone. It's just a base and you have a regular phone connected to this base, and it works just like a regular telephone, but it talks to a cellular tower. They don't have to run cables to your house for it to work. So, anyway, Dish and AT&T's new wireless partnership may foreshadow DirecTV deal. This was July 19th, 2021. So, AT&T is replacing T-Mobile as a Dish Network's primary network services partner, bringing the wireless company closer to the satellite TV provider it nearly acquired almost 15 years ago, and potentially increasing the likelihood of Dish-DirecTV merger. This right here is what's really... Now, they've been talking about this for a while. So, according to people familiar with the matter, Dish founder and billionaire Charlie Ergen, and I apologize if I pronounce his name wrong, and I've never heard it pronounced, but he reached the final stages of selling his company to AT&T in 2007. He pushed for the last-minute change in terms, and the deal fell apart. So since AT&T has acquired and substantially agreed to divest at least partly DirecTV and Warner Media for more than $167 billion. That's nothing to sneeze at. Including debt, this year AT&T sold a 30% stake in its pay TV operations, including DirecTV, to a private equity firm, TPG, and formed a new company. 3 months later, AT&T announced plans to spin off Warner Media, for which it paid more than $100 billion in 2018. Dish has discovered offering wireless service to complete the AT&T, Verizon, T-Mobile, with AT&T, Verizon, and T-Mobile for more than a decade. Ergen capitalized on opening to get government support as a fourth competitor when T-Mobile and Sprint merged last year. Dish needs a partnership with an existing nationwide wireless provider because it doesn't have a national network of its own. Dish owns billions of dollars of wireless spectrum, which will be used in conjunction with AT&T's network. It has previously agreed to use T-Mobile's network and as its mobile virtual network operator and roaming partner. Arguments over T-Mobile's decision to shut down its code division multiple access network may have pushed Dish to seek a deal, even through AT&T also doesn't have a CDMA network. Dish's agreement with AT&T lasts 10 years. So this is a 10-year agreement, longer than its prior deal with T-Mobile, which expires in 2027. So they're already, kind of tossing things back and forth. I think what they'll probably end up doing, and it looks like they may, since they've already have a deal worked out, I believe eventually they're going to merge into a new company, or maybe they'll keep AT&T name, or maybe they'll keep the Dish Network name. I don't know. Time will tell. We shall see. But they're kind of sort of working things out. They didn't get it worked out exactly the way they wanted, and they didn't go ahead and go do a merger back in the day, but I think they're still talking, and this deal, this 10-year deal, they're seeing if this things can work together, and if this is a good partnership with them, I could see a merger between the companies. I really can. I could see a merger happening. I think it would be a good thing. Here they go on to say, choosing AT&T brings companies closer together and further increases the likelihood that Urgent and AT&T Chief Executive John Stankey attempted a DirecTV merger down the road. According to Jonathan Chaplin, an analyst at New Street Research. So this analyst thinks that this is going to happen down the road too. I think it's a good possibility. They would not have worked into the deal if they didn't think that maybe something could work out and could happen here in the future. Maybe within the next 10 years, DirecTV and AT&T may merge into one company. They may combine their resources. Okay? So, Dish Network, I said DirecTV, didn't I? Dish Network and DirecTV, or AT&T, if they merge the resources for the DirecTV and Dish into one, okay, and take the customer base from both companies, combine them into one entity, okay, so they're not competing with each other at that point. I think AT&T stock will take off, or if they change the stock ticker, they could change the name of the company at that point when the merger happens. And that might be part of the reason this hasn't happened yet. Maybe they've not agreed on something yet on how they're going to go about doing this. It's still in the works, and sometimes this stuff takes years to work out. One side says, "Well, what if we do it this way?" The other side says, "Well, I don't quite like it that way. Why don't we tweak this and do it this way?" And then they'll talk back and forth until they eventually, if they come to an agreement where both sides are okay between the whole merger deal. Excuse me. I can see this coming to fruition. I think this is a strong possibility that this merger can happen. So AT&T's been around for a long time. It's a strong company. DirecTV's been around for a good while. Yes, streaming services has hurt like cable television and satellite television sales. I'm sure. A lot of people's probably streaming Hulu and Netflix and just different services. Disney, has started streaming uh, here a little while ago. So streaming is in with Warner Media going on with AT&T. I think that puts them in the market to compete with streaming services. But there's something to be said about having cable or dish TV. I mean, dish will get you access to network access. Watching sports, news, whatever you want. HBO, whatever. And they don't have to have a cable run on a pole or underground to your house. There's a lot of areas of cable. My house, I'm the very last house in my neighborhood to have cable TV. So on up the ridge from my house, anybody that wants TV, they've got to go with either Dish or DirecTV to have HBO or whatever you want to watch. WB, ABC, all the network stuff. So there's still a market for that kind of stuff. There's places out here where here in East Tennessee where I live, is what I mean. And I'm sure there's other states that's the same way, that you can't get internet still. There's still rural places, farm towns, just out in the country locations, rural, remote places, up in the mountains, up the Tellico Mountains and Smoky Mountains. And I'm sure in other states and other mountainous regions that you can't get cable television, and you have to go with satellite. And one of the things that AT&T offers is internet that way. So there's a market. There's going to be a market for a while. I don't see the cable companies expanding out very, very quickly in remote areas. And the thing is, with COVID, there's a lot of people working from home, and they've got to have internet access. And if you don't have cable internet, I mean, dial-up, you can still get dial-up, but dial-up very slow compared to having a good direct connection through cable or a DSL. There's a lot of places that you can't get DSL. That's an alternative to cable internet, is DSL internet. But I think this is a very strong possibility. I think if they work this out, I think it'll work well for them. I think they can make this work. But what am I? I'm Jerry D in Tennessee. I'm not a stock advisor. I'm not a financial advisor. I'm just a guy on YouTube talking about stocks. But this is my opinion, and this is one of the reasons that I dropped over $15,000 into AT&T recently over the past month. I'm still in the green since I bought in, so it's down on the week. This past week, it's dropped down below 21 where it had been 21. But I think this is a good long-term hold. I mean, the plus also, they're paying out dividends too. Dividend yield is 5.31%. You're not going to get that from a savings account at the bank. So my $15,000 is going to bring me $217 every 3 months. I'm going to have a $217 check for dividends just for having the stock. So And that's not much, but that's $217 you wouldn't have, and that's that's 4 checks. That's $800 more. You're not going to draw $800 interest on $15,000 through your bank on your interest on a savings account right now because interest rates are so low. So, to me, that's my savings. So I'm still up in the green from where I bought it. I think it's just a matter of time if they get this worked out, this merger thing worked out. Because right now AT&T's 2090. If they do a merger, I don't know what's going to happen to Dish Network stock or AT&T stock. Will AT&T stockholders end up with shares of Dish Network stock and AT&T stock go away, or will Dish Network holders and I'm thinking probably Dish Network holders will probably get AT&T stock, mainly because I don't know that they're paying dividends. This does not say that there's any forward dividend and yield, but they do have an EX dividend date, and I guess maybe in the past they were paying dividends. They quit. I don't know. I've not researched the past, whether they have or not, but it's interesting. They have an EX dividend date. That might have been the last date that they had. They were 2012 might have been paying out dividends, and then they quit. I don't know. I really don't know. I never had Dish Network stock, but the price on the stocks are so close. They are so close. I could see a 1-to-1 trade-off on the stocks between the two if a merger happens. I don't know if it'll go that way, but I could see it. It's rare that you get a 1-to-1. Usually you get less value off of what you had on the previous stock moved over, or that's the when I've been involved in mergers, that's how they've worked out. They may have been mergers where people have come out with more stock is worth more, maybe more shares or something like that. But they'll do some kind of trade off if the merger happens. I'm suspecting either the one of the tickers are going to go away. They may keep both tickers though. I think they're in the process, and I already consider them maybe sister companies because of the fact that they have this deal for the next 10 years. And I'm thinking if this thing works out and they make it work out for them, make it a go, and everything's good, I think they'll go ahead with a merger. The fine details that they couldn't agree on, they'll negotiate back and forth, and they'll come to an agreement, and they'll get it worked out, and it'll happen. I think it'll happen because, again, like I said before, they're eliminating competition. If they do a merger and they do combine both their customer bases into one, they're not competing against each other. That's just they took out part of their competition right there. I mean, I don't know what other satellite companies are out there. They will still have Netflix and Hulu and some of these other streaming companies, and a lot of the networks, CBS, WB, HBO are streaming online. If you don't want to have cable or satellite, you can for $10 or so. And Disney Plus is $6 or $7 a month, something like that, $6 or $7 a month. So instead of paying $100 and something cable TV bill or a Dish Network bill, people are starting to stream, and it's a little cheaper. You just pick what you want to watch and do it. But it seems like AT&T's getting into the AT&T's working toward competing in the streaming service as well. So with Warner Media. So we shall see what happens. I really think this is a positive thing. I think this is going to go somewhere. Time will tell, though. Time will tell. You know, I just feel positive about this whole agreement deal. The 10-year agreement that they've done, and I think if they make this, if this agreement works out for them without any issues, and it's profitable for both sides, I think they'll work out a merger deal and they'll merge into one company. But we shall see over time. Anyway, that's why I'm so hyped about AT&T. I really think it's a good investment right now. I think with the stock market being down, when the economy and the stocks and the crypto starts coming back up, I believe the stock is going to come back up. I think Dish Network's going to go up. They're at 21. They're at 21.50 right now, and they've been on a slower little down climb as well. 5 days they've been up and down. A month they were up and then come down. I don't know. I think they're going to come back up. I think Dish Network's going to come up. I believe AT&T's going to come back up. It's just a matter of when the stock market starts coming back up, you're going to start seeing AT and Dish. They're both household names. People know the stocks. People are subscribed to these. This is services that people use, so people know, or well, they've known these services for a while. So, and there's people that believe in them. They're satisfied with the services. So I'm sure the stocks are going to do well. I can see over the next 10 years we could see this stock shoot up. It may hit, I talked about in a previous video, the article about $28, $29 a share. I think they can hit that. The stock market starts coming back up, and we get out of this bear market and get back into a bull market, these stocks are going to go up. And this is the time to be buying into this stuff. And these household name stocks are the safer stocks to be into right now. Okay, they're lots cheaper, or they're a lot safer. They're not cheaper. They're a lot safer than the penny stocks. Penny stocks are very volatile. They're very high risk. Yes, you can make money. I've made some money off penny stocks. I mean, I've turned $400 into $8,000 on one trade. I did a video on 3 stocks. If you invested a certain amount of money, and I mean a low amount of money, you would have had $17 million off these stocks. If you go look at some of my past videos. So, yeah, I think this is a good investment. It's a good time to be buying into it. If you're looking for something, if you're looking to invest in some stuff, you're looking for some safe stuff, into well-established household name companies that have been around for years and are stable. So that's just my opinion. I'm not telling you to buy into it. I'm just talking and giving you the facts, and I invite you to look at the articles I post in the description, and just determine for yourself whether you want to invest. If you're looking to invest in some stuff, the plus side is this is a dividend stock, and it's going to pay you dividends. And if you do dividend reinvestment, then what that does is it takes, like, for example, my $217 check that they'll be paying me every 3 months will buy $217 more of AT&T stock, and then the next dividend payout will be a little more money. That $217 will be growing every 3 months, because every 3 months I'm buying more stock. It's automatically buying more stock for me. So the thing you have to watch, like with E-Trade, when you do that, you'll end up with partial shares with the dividend reinvestment, because they'll take your whole dividend check and they'll buy as much of the stock as they can, including a fractional share. of the stock. So when you go to sell, you can only sell whole shares of stocks. So you'll have to hold the fractional share until your reinvestment gets a whole share of stock that you can sell to completely get out of the stock. So keep that in mind if you do that and go that route. But the dividend reinvestment is just another way to compound your money, like interest. It's another way of compounding your money, because you're taking your money and you're causing your money to work for you. Don't take that dividend check, and spend it. You're investing for your future, for your retirement years, so you'll have a good, comfortable retirement. That's what your 401k accounts, when they're investing in the mutual funds and stuff like that, that's what the mutual funds, they're just buying stock and they're reinvesting, and they just keep buying shares, buy, sell, buy, sell, buy, sell, just to build your money up over time. You have managers that's managing your account, and they're investing and selling and reinvesting and trying to get you the most out of your money, the bang out of your money, to make your money work for you. And that's the whole idea behind having a Roth IRA or a 401k. Roth IRA is probably your best deal, because it's it's going to be a tax-free. This is money you're putting in after your taxes have been paid. But yeah, I'm all in AT&T. I'm going to be in it for a while. Just wanted to make this video, talk about this merger and my thoughts on. I really believe this is coming to fruition. They have this 10-year deal where they're working together. I think it's just part. This is just part of the process of the merger happening. I think this is a very real thing, and as you saw in the article, they think it will happen as well. So. Or at least the stock analyst thinks it will happen as well. I think it's very possible that this merger can happen. And again, like I said, they're eliminating competition. They would merge their customers together as one, and they're not competing against each other anymore. So that being said, I hope you're having a great weekend. I hope you've had a great week. I hope the next week is a profitable week and a good week for you. Again, keep what's important. Don't spend. Don't buy into stocks with money you can't afford to lose. Use money that it doesn't matter if you do lose it. It won't break your bank account. Okay, keep your lights on, keep a roof over your head, keep food on the table, keep clothes on those children. Don't let them run around naked. I'm telling you, just keep what's real. Be responsible, because it's like going to the casino and gambling, and you don't want to blow your whole paycheck. Just make a decision. This is what I've got to live off of. This is what I'm going to live off of. And if I have this little bit left over, if I've got this little bit in savings, it may not matter if I put it in some stocks. If I win something, it's okay. If I lose a little bit, it doesn't matter. Keep it real. Don't hurt yourself. Don't get yourself in a bind trading stocks. Do your research. Look at the companies and trade within your means. But anyway, that being said, I hope you have a good night. I appreciate you watching my video, and hopefully we'll see you in the next video. Love for you to subscribe. If you're not subscribed, if you hit the notification bell, you will be alerted when I come out with a new video. But thank you. This is Jerry D in Tennessee, East Tennessee. And I'm just sitting here talking about stocks, and I'm all in on AT&T, and I'm going to be in it for a little while. Anyway, we'll catch you in the next video, and everybody have a good night. Thank you. Bye. Bella's got to be right up under me, don't you, Bella? Oh my word. Cloudy day, looks like it may rain. Clouds out over the valley. East Tennessee Valley. And Bella, she's just happy to be around.